Hi, welcome everyone to Santa Cruz Works New Tech. This is a conscious capitalism clinic. And I'm going to start by saying hello to everybody. I'm Doug Erickson, and Adrian Matthew, you want to say hello?
Hello.
Hey, how's everybody doing?
Great, thanks guys. Also, we are supported by an uncommonly talented, good-looking, spiritually enlightened, and brilliant team of people. Names and faces are not enough to give them the credit they deserve, but for now, my praise and admiration will have to suffice. We're also supported by the generosity of our benevolent sponsors. Thank you to each and every one of them for contributing to the success and our wonderful and unique community. So now I'm honored to introduce our featured speaker, Kristina Kuprina. Kristina founded Sequoia Wealth Advisors in 2007 after a highly regarded career at traditional investment firms, primarily trading, portfolio management, and economics. She founded Sequoia to help her clients achieve financial consciousness. She will share today her firm's unique focus on conscious capitalism, how businesses can be socially and environmentally responsible. Kristina is a designated certified investment management analyst and a member of the Investment Management Consultants Association. In May 2020, she was named to the Forbes Top 1,000 Female Advisors. She attended San Francisco State University and Haas School of Business at University of California, Berkeley. And now, without further ado, I give you Kristina Kuprina. Hi, Kristina.
Hi, good morning. I'm sitting here in the foggy space of Seascape at the office here. So all bundled up. Looks like it might be a bit warmer where you are. That being said, I want to express my gratitude and appreciation for the opportunity to share the concept of conscious capitalism with an audience outside of our own. These are times when many people are rethinking and revisiting and reevaluating life, whether it be individually or business-wise. So what I thought I would do in my time today, and I want to stress, I do encourage questions. I encourage commentary. I would love to make this interactive. This is an area of great passion of mine, and I want to, again, have this be as beneficial as possible and interesting as possible for everyone. I thought in areas I would touch upon would be kind of what is conscious capitalism. It's a very, very open-ended terminology and means many different things to different people, but I want to kind of go through sort of the framework. And then talk a bit about income inequality and why does this matter? Okay, and I'm going to speak from an economic perspective more than the social perspective, because I think we're all well aware of that, but it may be a little bit of food for thought why conscious capitalism is so critical for the future of our society. Another one, can we fix the system or at least improve it? The system as is. Talk briefly about the universal fund and what it is, because that's a concept that is becoming more and more in focus of one of the ways of looking at conscious capitalism and income inequality. And finally, ideas of maybe things that you could do or things that you may find interesting as well, just if you want to continue on this path of exploration. I know that we have both business leaders as well as individuals on this call today or on this webinar today, so I want to try to touch upon both. So I will focus primarily on the business side of it. I'll make sure to say things for individuals as well. I did want to add one thing. Back when Sequoia was founded, I founded it back in 2007. The idea was to create a better financial services firm where we didn't have to sell anything. We didn't have to limit ourselves to any certain type of client. It was much more of a passion for doing the business and doing it well. In about 5-6 years ago, I had a significant spiritual experience on a trip down to Peru, which is a place I go back to twice a year. And that led me to the vision of conscious capitalism. I never expected Sequoia to grow as much as it has. And it makes me very grateful that this message is getting out there. So I wanted to add a little bit about the why. Why is this financial person so interested in changing capitalism? Okay, so conscious capitalism, the concept of it is, and it was a bit on the notes about this event originally, is kind of different ways of looking at the system as it is and how we can improve it, rather than ripping out and going to a different system. Okay, it's not just the economics of it, it's also the social aspect of it, and it hits so many different areas of our lives. So the usual narrative around it is capitalism good or is it evil? Should we keep the system as is, or should we replace it with something else? And there's all these examples of the wonderful things that capitalism has allowed for and created, especially the level of innovation and the opportunity that countries like the United States provide. Okay, and many of you are tech entrepreneurs, so this is probably something very, very real to your heart and very real to your lives. On the other hand, there's the effects of that and effects to the environment, perhaps to the effects to people, to income inequality. Not everybody functions well. So the idea of going towards socialism or some socialistic type of way where things are more evenly distributed. And then there's the pros and cons of that, as we can see throughout history. One is what will it do towards innovation and whatnot. So there's a third way, though. There's another way of, it doesn't have to be one system or the other system. How can we take the system that's here and reform or change it? Now, the complexity to reform and change is always this. It's if you have to take something away from one group and give it to another group. I'm being very simplistic about this, but this is where the argument usually comes. I worked very hard. I created or innovated or built something great. Why should I need to be forced to give it to others that I may not agree with, right? We force it to give to a government that I may not agree with how they're going to spend it or use it. Why can't I choose where my money goes? And then you have people on the other side saying, it's not fair. You have this great wealth when people are suffering and starving. You should distribute some of that and create more of a fair system. And that becomes where the conflict. So many of the ideas of changing or reforming the system come from more of a carrot and stick approach. Carrot and stick approach is being, we have another way of doing it. It's up to you whether you participate or not. And kind of the idea of this, if you're familiar with the term of private ordering is where there's a system or a structure. It has rules, it has requirements to be part of it, but you're not required to be part of it. So think of when the government sets up a rule or a regulation, you have to comply. If you don't, you could, go to jail or be fined, et cetera, right? There could be a social repercussion of not following with an order, right? It's a forced thing. On the other hand is the idea of, the free markets. Do whatever you want to do, make money. It's good for the shareholders. It's good for society. It's good for, workers who work for your company, right? That idea of it. So the social ordering concept, which is used by organizations, interestingly, like a lot of universities, the Red Cross does it, even the New York Stock Exchange, which is if you want to be part of this, you can, anyone can, but you follow within our rules and our processes. Okay, so the idea of it is what's kind of come around this is, can we put systems in place that encourage companies and individuals to do things differently, but not force them, to create a system where it's more equitable? Now I'm going to jump in quickly here and with a couple of statistics to kind of flavor this a bit. Many of you may already know this, but it's important as a reminder. I'm not going to go into the social aspects of this because I'm an economist, and there's plenty of resources to take this further. So for the purpose of today, I'm just going to give some statistics to why income inequality is such a very, very critical issue. And we'll need to address this as a nation going forward, or we're going to have very significant issues. Regardless of where you stand on that position, it needs to be remedied. We need to find new ways. $515,000 a year in income is the most recent data. What will qualify you as the 1%. Okay, that's 39% of the total wealth in the nation. Okay, this data is a year or two old right now, year and a half old right now, but it's close enough. The top 10% own 94% of the business equity, 34% of the stocks, and 82% of the personal home real estate. So that's another one I would bring up. Family income of the top 95% has almost doubled in the last 13 years. It has gone negative for the bottom half, which means it's primarily high levels of debt in relation to income. That's a really big turn, and that's happened within the last roughly 11 years. This one is very relevant now, especially around what we're hearing, with Black Lives Matter and racial inequality. This one was actually very shocking to me when I was putting this together, but I added it for the purpose of Black households with college degrees have 30% less net worth than white households with no college degrees. That's a pretty stunning statistic there. There's other components around COVID that are actually exacerbating this situation. It's becoming worse. And one we're already seeing is especially in education. There was a big difference between the effects of at-home learning on the lower income as opposed to the higher income households. It's already starting to be, the data is already starting to be pulled together. That's one. And of course, that's a lifetime of learning. It's a lifetime of opportunity ahead. In addition, the vast majority of the people who are unemployed were making less than $40,000 a year. Yes, currently unemployment benefits are quite generous, but that will go away. How does that affect things? And many of these jobs will not come back for the foreseeable future, unlike those of us who have been fortunate enough to work through this time. So not to have this call today be negative and all the things that aren't good, but these are really, really important, yes, socially, but economically. 2/3 of our economy is consumer spending money, okay? It's workers being paid enough that they have the disposable income to be able to spend money drives our economy. People in the lower half of the socioeconomic spectrum tend to spend more of their money than people on the upper half. So there's a lot more reasons, but I just want to throw out these economic figures is that if we do not figure out income inequality, and we will never have equality, I'm not here to say that, but if we can get these a little more balanced, a little more fair, it's going to be better for long term. Because if not, quite frankly, if you look at history, it'll be revolution or it'll be stagnation. It's going to be A or B. We've got historical precedent here. Now, the challenge, of course, is the mindset that because somebody over here has $1 billion, that's why I don't. It's a mindset, and it's really pushed apart by the media and about a lot of groups and interests, whatnot, that it's the wealthy's fault that people don't have enough money. And that's not the case because, abundance is unlimited. There is no limit to money. Money is created every day. Look at all the new technology. Look at all the new technology we had that we didn't have 10, 20, 30 years ago. Money is created constantly. We can look at the debt levels in this nation. We can also look at the income levels in this nation. So one person's wealth does not mean another person's poverty. It's the balancing out. So I wanted to talk a little bit about ways of improving the system, just some considerations at this point. One big one, and this is not my idea, it's put together by 3 brilliant people, and it's great, gaining a lot of traction. But it excites me as an economist because it seems to address a lot of these areas, and it doesn't force anyone to do anything they don't want to do. Right there, that gets excited, right? So remember the carrot and stick approach, carrot and stick. So the concept of a universal fund, and I want to stress, if any of you want more information on this, you can't Google it easily because there's a whole bunch of other universal funds out there. More than happy to send it to you for your own, preview to go deeper, or reach out to me, and I'm, like I said, I'll connect with you and get you the information. The concept of a universal fund is, think of a mutual fund. Think of a fund where investors are not investing with money, but you are an investor just by the prelude of the fact you are a U.S. citizen over 18 years or a U.S. permanent resident over 18 years old. This fund is created by corporations and individuals making charitable donations to it. And this may sound, kind of fantastical. Well, how are they going to raise all this money? Is this income fund, universal income fund? Over $410 billion were contributed to charities last year by individuals, foundations, and corporations. 1-year-old data. So it's not that hard to be able to raise money. The government could also add money as well. There'll be other sources, and there could be a lot of incentive. That's the carrot. This fund also can take stock. Okay, so stock can be donated directly, which would be an additional tax benefit for any of you that are familiar with stock donations. So appreciate stock donations. This fund is created by donations going into it. The government does not have to fund it, and nobody's forced to put money into it. Every U.S. citizen and permanent resident over the age of 18 can register to be part of this fund. You have no other requirements. There's no money required. There's nothing more than just yourself. This fund will pay income out to all of the participants every year. How much income will depend on the size of the fund. Okay. In the beginning, you put $1 trillion in there, and the fund yields, rough dividends of the S&P, 2%. It's going to be like 300, if everybody eligible, the 200 some 20 million that are eligible do it, like $300 a year. So it's not very exciting. But as time grows, more money would be contributed, right? In addition, many people won't register for it because they don't really need or see the benefit. Now, why is this important? Not necessarily that the fund can easily grow to the size of the contributions over time. What it is that it gives people, individuals who have never had access to the capital markets, have never had access to being a contributor, a voter, have a say in how corporations are run. So I'm going to set that aside. So it is a way of all Americans to participate in a fund. The fund is not managed the way funds traditionally are, so it's not going to be a big money maker for the people that are doing it. I'm going to set aside a lot of the details because I want to get into how this really changes everything with capitalism. So companies now are going to be held to different standards. So now the way it is the vast majority of the investors don't really have a say-so in voting. So if there's a company out there, and let's say it's an S&P 500 company, and they're not doing very good things, socially, environmentally, whatever the issue is, there's a little say that the investors actually have, because the majority of shares are held by generally index funds held by very, very large corporations. Some of these large corporations are very fee sensitive because they market themselves on being very cheap. They have no interest in rocking the boat, doing any proxy voting, any change to the company. Okay, so you as a shareholder in XYZ S&P 500 index fund are just simply invested in this companies, but the voting rights are by and large held by these large mutual fund or large investment companies, and they don't really get involved in the way that companies are managed. So if you want to see board diversity, if you want to see better environmental protections, if you want to see more equal pay throughout the workforce, if you want to see these changes, you don't have a lot of control. Hence, companies are not really necessarily motivated to change. And yes, there are funds, and yes, there are ways to invest. I build a lot of these for my clients, so I'm really familiar with the ways of doing that as individual investor, but most investors don't have the access and don't have the knowledge. So they with the lack of control over the companies aren't really beholden to make changes, right? So this way, within this fund, as these companies are held within this fund through donations over time, what happens is individuals have a lot more say in how companies are managed, how things are done. So if there's a push towards climate change, you would have the ability to vote. And again, I'm being very simplistic. I know this sounds very optimistic, but there's a lot of technicalities to it that I would get into when there's more time. People just feeling like they have more control and power and say in the way things are done. If you think of it now, corporate power, large corporations, let's say publicly traded large corporations, corporate power is immense. Corporate power is to the point that we have major companies that are buying newspapers, that are buying media, that are buying political influence. Okay, there's a tremendous amount of power in corporations. And so what happens is that when you have that level of power and influence over the media, which captures the social aspect, over government, which now captures rulemaking, lawmaking, et cetera, then you have a lot more power than any individual has. And in a sense, it's even more power than the elected politicians have. It makes it very difficult for change to happen. So when you have that type of power, what do you do? And I'm saying, what do you do? These types of corporations, they want to maintain that power. They will sponsor the campaigns of the people that will let them continue doing things the way they do, not the campaigns of people that are going to look for more change. So that further separates individuals from the direction of the country and also their opportunity. And again, I'm not going to go too much into the universal fund because this was conceptually how it can be done. Participation, the more people feel they participate, the more involved they become, the better the outcome. Why is that? Intention. Intention is very, very powerful, very powerful. If you can align your decision-making with your personal intentions, okay, with that for the good of society, which of course can be seen differently by different people, but the whole thing is voluntary, great change can be made. And you can see examples all the times of companies not really getting involved in an issue until the issue takes there's a lot of public pressure. We're seeing that right now with companies making changes because advertisers are pulling out. We're seeing that with companies making changes because their employees are asking for those changes. You're seeing companies that do it because they can see the plus to the minus and they're willing to do the change. And changes that happen by choice are more likely to stick and be more widely adopted and accepted than changes that are forced upon you. So for an example, we have two ways that much of our decision making is done. It's for financial reasons. Can I afford that? Can I afford to send my kids to that school? Can I afford to buy that house, that car, this and that? Okay, or even to take a job or start up a company. And the other one is, can I? Government regulations. Can I fill this prescription? Can I live here? Can I open my business this way? Right now, can I go to a restaurant or a bar, right? It just, it's what are the regulations? So these are the things that dictate much of our life. To some degree, we have control over this, and to much degree, we don't. If we have a way of doing things that we greatly value and appreciate, and a new rule comes down that restricts us from that, even if we know it's for the greater good, there can be a natural resistance being told to do something. And you're seeing that right now play out around COVID. You're definitely seeing that play around COVID. You have some people that are like, it's the rule, follow it, don't even second guess it, the government is our friend, and whatever they tell us to do, we should do. And you have people on the other side of the field that are very resistant to being told what to do, even if they probably know it's for the greater good or for their greater good. Becomes resistance. Resistance puts up defense. Defense creates an environment where people are less likely to want to do things within their heart. Most people want to do the right thing, but the fear is what stops them. The fear of scarcity, the fear of losing what they've worked for, the fear of lost opportunity. I mean, you can say this in so many ways, but the fear is what stops people from making change. Pressure, political pressure, social pressure, financial pressure also has a big impact on it. There's a lot of interest in keeping people separated because it's easier to control people when they're at each other's throats. In fact, if you look at the Romans, divide and conquer, right? You look at what's happening in the political structure right now. You don't have to run a really good candidate if you can convince everybody the other person's worse. The same things goes with financial and economic considerations. Us against them. If I do this, I lose this, right? This person owes me. I don't owe this person. And this mentality, this conflict, this idea of separation is only changed by changing the hearts and minds. How is it done? As I said, through the public ordering concept of the carrot and stick. Here's opportunity to do things differently. Here's the benefits to you for doing so. The stick is, if you don't want to do it, you're not part of this. And bit by bit by bit, this has the power to make significant changes for everyone. There's a number of other ideas that kind of fit in this area, and they're very personalized and customized. I want to stress that I can easily talk with or explain any of these high-level concepts in more detail. I can easily go into how any company or organization can do things differently from, again, an economic or financial model, as well as from the why, the big why. Companies that are clearly aligned, and individuals that are clearly aligned with what their intention is and follow that, can achieve great success on a financial level, on an innovation level, on whatever level they wish to do. It's an alignment of everything that's important. The heart, the mind, the intention. It's very, very important to bring us as a society back from the conflict as a model to the working together as a model is changing the hearts and minds. And the idea of doing this is finding the least intrusive way to bring people into some collective ways of thinking. I want to take a quick stop here because I want to make sure that are there any questions? Is there anything that people want me to delve into further? Because I kind of really covered a lot of this in kind of a sporadic way. And I would like to know what areas I should go into a little bit deeper. So I'll just take a break and see if there's any questions.
Okay, thanks, Kristina. Yeah, there's definitely some questions. I'll start off with a couple here. First one, what do you think of the proposed one-time wealth tax for people making more than 2.5 million a year? When they would be, that money, that revenue would be used to distribute to the lowest income impacted by COVID.
The complexity is more what would be done with the money. The tricky thing about a wealth tax, any wealth tax, because this has been brought up in a lot of different reasons or a lot of different ways, is that very, very wealthy people, many of my clients, don't pay as much in taxes as people at a far lower level of wealth because of how their wealth is held and how that's paid out and how that's taxed. So the concept is we'll just tax people on the actual value of their assets, not just on the income or the capital gains. The trickiest part of all is many people's wealth is very illiquid. So if your wealth is tied up in your business, say in real estate, in any illiquid types of assets, you don't necessarily have the resources to pay a large tax on them without selling them, and they may not even be sellable. So the wealth tax, conceptually, I can see it. Practically, it's going to take quite a bit of work to do. The second thing is, and I'm going to take a little risk here because this is a little bit of a personal opinion. I understand there can be some different opinions on it. The government is not always the best steward of our money. In fact, it's often not, because there's a lot of special interest involved. And the person that with the greatest connections and the person with the greatest wealth that has the political connections is generally going to benefit the most from any types of government allocation of assets. So I believe strongly that if we're going to take large sums of money from the citizenry, I think there should be some oversight to it and how it's done outside of just the politicians. Again, I'm just going to touch that a bit on a bit personal level, but I do think a wealth tax can be phenomenally disruptive from that standpoint. And you're getting back to take from one to give to another. And is the other grateful or demanding? And is this person giving from the heart, or are they giving by force? In which case, if I'm sorry, putting the wealthy person here, less wealthy here, you take money from this person to give to this person. And this person will go, I don't really feel this person should have that money because they're not doing wise things. I'm making up an example. I'm going to put it on this offshore account over here. And then no money goes. If you say, I'm going to give you a huge tax break if you give money to charity or to others, right, to the universal fund, you're going to tend to get a lot more compliance with a lot less squirreling way of money. There's no shortage of ways to move your money around, especially at higher wealth and income levels. So that would be a bit of a challenge as well. If the taxes become onerous, the money moves. And we see this right now with low tax states in relation to high tax states. There's a tremendous movement of money out of California into Nevada and money out of New York into Florida, of people, companies. Why is that? High tax, low tax. And people are willing to pay higher taxes to a degree. So sorry, that maybe have been a long answer to a simple question, but those are what I would call the complexities to any form of wealth tax, regardless of the use of it, are those two pieces.
Great. No, very well said. Okay, I'm going to kind of combine two questions here. Someone asked, which corporations would be invested in the universal fund? And to follow up on that, are B corporations preferred in the universal fund?
Well, the concept, and again, this is a very well thought out concept in many ways, because they've addressed a lot of, again, the concerns about it. A lot of it would probably start with donated stock. So it would quite be a little bit of a cornucopia of stock. So imagine if I'm XYZ publicly traded company, okay, and I want a tax break this year because my taxes are going up. New president, higher corporate taxes. I don't want to get my margins killed and my stock killed when I have to report that. I'm going to donate stock and take the deduction. So what would I do? Donate my own stock. So I can see in the beginning the fund could be, and individuals may donate any highly appreciated assets. So the portfolio manager is probably going to have, and the concept of this is that there's no reward for performance. So there's no concept of short-term trading or anything like that. The total purpose of the portfolio manager, just to make sure we're not overweighted. You don't have a very, very wealthy benefactor or business owner putting a significant amount of one stock in there that could create risk for the fund. But that would be a hodgepodge of real estate, B corps, publicly traded corps, privately held corps. These are just ideas: fixed income, bond, credit, and whatnot. I think it would be a hodgepodge of investments. I'm not sure if any investments would not be allowed from a risk profile because guys haven't quite gotten to that part. But you wouldn't want to limit what people could donate. Did I answer both of those well enough?
Yeah, no, for sure. Thank you. Next question. Because these are changes to the existing system, how could a company be established to better reflect these changes?
Well, at this point, because it's in a conceptual, we need the political and the social will to do this. And I know that's a big thing to say right now in this environment. The reason I think this has a good chance of flying is that there's regardless of political or social or economic beliefs, the issue of income inequality is going to be such a big, again, I'm going to say it's already a problem. It's going to be even a bigger problem. It's going to affect more and more people. Maybe people that right now don't care are going to start caring when it hits them in the pocketbook. That you're going to get more of a broader base bipartisan, if that even exists. I mean, it obviously exists, but a type of thing towards this. As a company, though, more so would be the promotion of that as a concept with your leaders, with your politicians. Get it up the food chain of the decision makers. Because it's something that I feel either party could take on and it would still could fit into their mandate. That's the conceptual. On an individual level, though, you can see how can I create something similar to this so my employees or, well, your investors will automatically, but your employees can also potentially benefit without necessarily going to a fully employee-owned ESOP organization. But it's that same concept. And the concept of the value of labor is always tricky. Okay, so I know that I'm talking largely to a technology crowd right now. So you see that the skills you have is how you earn what you earn. Okay, and but it doesn't mean you're working harder than the person that's doing, let's say lower skilled labor, cleaning rooms in a hotel. You're not working harder than that person necessarily, probably aren't, but you're paid a lot more because the value of your skill is so much greater in our modern society and during this time. Also, it's harder to replace you. Okay, and that moves up the food chain. So if you're one of our, leading innovators that are out there, they're creating new technology, new cars, new this and that. Try not to use names here, but if you can command almost any price because you've proven yourself, but it doesn't mean you're working harder. So the concept of how you pay and value people based on their contribution, because the largest company would not be successful without people at all levels within the organization. It's absolute truth. So how are all people benefiting from the success of the company? And while yes, of course, the people at the top will always benefit more. It's a nature of how it works, and it's not a bad structure. But how can we more evenly balance that out as companies grow and are successful? So as a company, you can put in plans for all the people that support your organization, working for you and otherwise, of how they can benefit from the company's success. Outside of shares, you may not be to the point yet of doing, initial rounds of funding. You may not be a point, you just be a startup. And even if you are, you may have something different for employees than you would for other shareholders, depending on what series you're in. There's a lot of ways around that. I'm seeing some really fun ideas that are coming up. The biggest slowdown to all of this is regulations, unfortunately. There's a lot of regulations out there that kind of stifle innovation, and that can slow it down. But these would be ways that I would consider it, and share the concept with others. Modify it, make it better. My gosh, you guys are innovators. Make it better. We're economists. We're limited.
Good point there. Great. Okay, well, just a reminder for all attendees, if you have a question, put it in the Q&A. I see a couple of you that I have not asked the question for, so I will do that soon. But here's the next question. What is your perspective on the developments with the long-term stock exchange that seek to build a market where companies are rewarded for being built to last?
That's a really good point. And that if I had taken the universal fund concept further, that's the idea of how that's going to change. So since there's not trading in the universal fund, the companies are incentivized that instead of by short-term performance. We know that's a big challenge, especially when you're starting a company. If people want to know, what'd you do this quarter? What'd you do this quarter? What'd you do this quarter? What'd you do? And sometimes that prompts companies to make a lot of short-term decision-making to hit those numbers that impact the company on the long term. Okay, an example is running up a lot of debt. That's really common with companies. Not as much in the technology space, but a lot of other industries, tremendous amounts of debt because they got to hit the numbers, Another reason, not necessarily paying people as well as they could. Not focusing on environmental or social or equality issues because that doesn't reflect on the bottom line. Maybe over time it will. It's a great thing to do, but it's not going to be next quarter. So there's a lot of things that are focusing now on longer term investing. Now, investors, if this person asking a question wants invests, you can make, there's a couple of ways that you can actually make a very big difference as an investor and still not affect your portfolio. It's probably a little bit outside of the, this event today. There's a lot of things that you can do to reward companies as well within your own portfolio and still get a good return. They're not mutually exclusive. I get hired a lot of times by people whose values are very, very, very important to them. And that one, they want to put that at the top of the pyramid of the portfolio construction. And the returns are not any different than my clients that don't care. Because as long as you're building it right, it doesn't make any difference. But what happens is there's that connection. There's a connection. Every single portfolio we build is customized. So we can build any way someone wants. It's kind of, because then they're like, I'm excited because I know I'm making a difference in things that are important to me with my portfolio, and I'm still not going to eat cat food when I retire someday. It's important. So individuals can make a difference. Companies can make a difference. Changing the structure of it, again, it takes time. It takes communication. But what talks is money. If people buy and sell stocks based on how they did last quarter, that's exactly how they're going to be rewarded. And the reason that the quarterly reports come out is because the idea of transparency to investors. So if we could change it and say we can only get a report from you once a year, company, and that's it, there's a pushback would be investors aren't aware of problems when they're small and they can get out of the stock and then they become big and then the company collapses. So that's the argument for it on each direction. But investors will drive this more than anything else. And there's, again, if I have time, I'll go into that a little bit further, but there's a lot of ways that you can do it as investors.
Great. Okay, next question. What are the universal funds rules for the recipients of distributions? Who receives and how do they qualify?
You qualify by, all you have to do is just register, and you have to be 18, and you have to be a US citizen or permanent resident. You automatically receive distributions. At this point, they're talking annually. And kind of think about the, I'm probably going to call it the wrong thing. There's the oil fund for Alaskan residents. It's probably not what it's actually called, but it's like that, where they were all paid a percentage of the oil revenues, pulling the oil out of the ground. And actually, it was meaningful amounts of money. It was, in the thousands of dollars a year for citizens of Alaska. It's the same concept. You register, you're a citizen or a permanent resident, and the fund pays equally for all registered participants each year. That's it. You get the income of that fund, whatever the income is. Any stock buybacks, where stocks are cash back, any income, etc. But since the fund principal remains intact, unless again unless stocks are cash already invested by the company, not by the portfolio manager, you're receiving all that income, and that's divided equally of all the participants. Upon those shares your ownership, one per person, cannot be transferred, can't be sold, can't be given to somebody else. Can't write derivatives against it. You can't do anything with it. When you die, it goes back in the fund. Okay? Plops right back in the fund, kind of like a profit sharing plan if you leave a company. So there's no wealth transfer to the next generation, to any of the family members, which allows the fund to grow perpetually. So I hope I answered that.
No, yeah, you definitely did. I'm amazed at the questions we're getting and how you're so snappy with your responses. You're
it's actually easier for me to answer questions and talk because there's so much information and my brain is like, what do people want to know?
Okay, well, let me give you this one. Let's see what you say about this.
All right.
Does the inability of all kinds of modern organizations to achieve the purpose for which they were created get in the way of creating a more fair social system?
Yes. In economics, we call it, basically it's incentives. So people generally operate based on incentives, what they value, what's important to them. They may do it from an more optimistic, positive way, like I wish to create this great thing, whatever that may be, right? Or from a fear-based way, which is pretty much how most of our society operates. Like, I have to stop this thing from happening because it's really, really, really bad. And that's kind of the operational flow of a lot of decision making, It's I must have or I don't want, must have, don't want. And that creates so much unhappiness for mankind, that's for sure. But that being said, companies are incentivized by not just what their leaders want, the leader of the company, they also are bound by regulations and the expectations of their investors. So it becomes quite complicated to do that. The alignment is, and a simple example is, why would a very large publicly traded company go and buy a major newspaper, right? They're not doing it because they want to sell advertising. They're doing it because you can use that to control or to, they'll say probably properly inform, maybe will be the words they'd use, the population, right? That you have more and more power, and the more power you have, the more you want to defend and protect that power. So think of a company even starting up. What are you protecting against? Your competition. All right. I got to be first to market with this. I got to do it better, faster, cheaper, whatever. I've got to get ready to prepare to be bought out or to change the world, whatever the motivation for the company is. Whatever the incentives are how people are going to operate. And then, that's the motivation. And then you have the want and you have the fear that drives it. So this, again, I'm going to step back a little personal belief. To change humanity and mankind, it has to be within the heart first, then within the mind, and then everything changes. Forcing it on people just means people do it grudgingly and are constantly trying to find ways not to do it. Think about paying taxes. What do my clients say to me when we're doing tax strategy? It is rare that the client comes to me and says, I want to be sure, Kristina, that I am paying my fair share in taxes, that I'm paying as much as I possibly can. No, even my most liberal, altruistic, want to give back to society clients don't want to pay more in taxes than they have to. Why is that? Because people, by and large, don't trust their government to do the best things with their money. They'll take that same money and give it to organizations that they support without question they will give. But giving where they don't want to and feel forced to is different. Companies are no different. So the alignment of incentives with the values is the single most thing. And I advise a lot of companies on that. We go through when we do the financial, and even individuals, because individuals can make a lot more difference than they think they can with small moves. And that doesn't really change their overall plan. Stop there. Again, I'll get passionate and talk about it for some time.
No, it sounds great. Actually, and we have so many more questions. So I guess we'll go to the next one. This is a really good one. What does this mean for those of us leading young companies and are looking for our first round of funding?
Well, getting funding, because I work for a lot of people who fund companies and a lot of companies who, I guess, joy being based in Silicon Valley that are being funded. This goes for whether people are investing or whether they're donating. They will tell you it's with their heads, and it is to a degree, but there's also heart there. So if you build your company with true vision, with true belief, with that true focus, that again, it's not just, here's how smart I am, here's my really, really great product, and I'm going to change the world. But it's with the heart, it's with the passions, with that, and you bring them both together. Because there's a limited amount of money people are going to give for heart and passion. I mean, you have to have a plan, you have to have a product, you have to have an idea, technology, whatever you're working on. But to bring those together, because people are attracted to those that are authentic, those that have a higher belief than themselves, and those that they can believe and buy into the whole story, the values, beyond the thing, the item, the idea, the concept. What is that story? Now that's see time and time again when my clients talk to me, come to me and say, update my plan. I just invested X into Series A of this company. I always ask them because I'm curious, what does the company do? And I can see almost every single time there's like they're interested, like they're like, and the person was really smart and they were interested and they were engaging and they had a great story. It's not just about the product or the idea, it's about more. All right. And my clients, they have the ability to, to fund a lot of different companies. How do they choose? Yes, of course, they want to see return on investment, but I'll argue many of them, if the investment didn't work out, they're not even going to notice. They're doing it because they believe in the company and they want to support what they're doing as much as for future return. Again, I feel like I can go on this stuff for quite some time.
We're going to have you back for sure. Okay, here's the next question from Ken. What are the incentives to encourage contributions to the Universal Fund? Is it just a charitable tax donation?
Well, that would be, I would say, a given. I would say if I was the president of the United States and I was the one, because it's going to happen regardless of who wins, pretending I'm president of the United States here for a second. And I have to say, we need to raise taxes. Our deficit, our debt levels are too high. They're not sustainable. We have to raise taxes. And that needs to be on new corporations and on new wealthier individuals. We need to do this. But we're going to give you a way out. And a way out is a tax, and whatever those numbers need to be, additional incentive to funding this fund. Because when you're funding this fund, it's also great for the nation, because you're going to reduce the people that don't have enough money to make it through retirement are going to be using government resources. unless we plan to have, millions of people homeless. They're going to be, the government is going to be supporting the people that do not have the means to support themselves, which means the taxpayers are going to be supporting the people, the government to support the people. So bypassing all of that extra layer of, bureaucracy and of course siphoning of the money off, if you say you're going to get an additional deduction, we're raising your taxes, again, carrot, stick, right? Carrot, reduce, stick, higher taxes, carrot, fund this fund. So that's a way of driving even more money. And if you question corporations' willingness to give, I forgot how many billions of dollars that corporations control, but let's see if I had that number. 27 trillion as of 2016, $27 trillion that corporations control. Government, 3.3 trillion. Now, of course, we can run up debt for the foreseeable future, apparently, but that's just giving you a kind of a ratio where the money is not with the government. The money is with the corporations. The government employs less people than Walmart. Okay, so there's a lot there. So the incentive is giving an additional incentive beyond the traditional charitable deduction that can be given, because long-term, this helps the US government with this, making sure, again, the resources are there, that people have the money they need. Also, the company, billions and billions of dollars were given around Black Lives Matter over the last couple of months by large public companies. I'm not talking about individual, I'm not talking about small companies. Billions with a B were given specifically towards whether it's communities, not necessarily directly to Black Lives Matter, but things surrounding racial equality. Off one topic, okay, one topic over the last couple of months. So the money's there, the will is there. Why are they giving it? Maybe a tax benefit, but they want to show they're on the right side of the issue and they're willing to put money behind them. So that is a targeted thing that, not everybody necessarily supports, but who doesn't support giving a safety net for our most vulnerable population in a way that's optional, not forced, optional. So carrot, tax break, stick, taxes.
Makes sense.
That's how it works.
No. Okay, I know you have a webinar coming up soon, so I have 2 more questions for you. We'll wrap it up. How would a universal fund be hedged against inflation or short-term market fluctuations?
Inflation would be a secondary consideration because the concept is the principal remains intact. Okay, so historically the principal will rise over time. With inflation, be less of an impact. The income coming out of it would be based on the dividends and based on the the interest coming off the income or whatever the asset is, real estate, etc. So the purchasing power would historically over time rise with inflation. When I say purchasing power, sorry, the income would rise with inflation. Historically, that's how it's always worked. But since you're right, since it is a fixed amount being sent out to every participant, if the fund itself didn't grow, in other words, more money wasn't being added, that $1,000 a year per participant would buy less product, less goods in a high inflation environment. So it would be dependent on additional monies being contributed to the fund. And my concept, this is probably not part of the fund, my concept to that is additional incentives during those times. And perhaps even there could be, because the concept of this is that the government doesn't need to do anything, because then it doesn't become a political issue. Because as soon as you get the government involved, it becomes political, right? But there could potentially be an opportunity for whoever's in charge at the time, Congress, Senate, coming together and deciding we're going to make an additional contribution to the fund to help offset inflation. But that could be something that would be decided by the administration at the time, going through the regular political evaluation idea, but I don't actually know beyond that. But if you're leaving the principle intact, at least you wouldn't have that devastation of harvesting it out, because people need a higher amount to keep up with inflation.
Okay, great. Thank you. Okay, last question, and this has been echoed a few times in other questions here. So how do we reach you and your clients if we think we have a compelling story and vision worth investing in? And how can we also just find out, reach you to learn more about the Universal Fund?
Well, my regulations prohibit me from recommending or connecting people to any investments that aren't publicly traded. This is another example of regulation stifling innovation. So unfortunately, I won't be able to actually connect investors to companies. I can, however, let me tell you what I can do. Let me do more can do. My idea with recommendation is that I am a connector by nature. So if I learn more and know more about it, and I know people, I can always say, hey, the two of you should talk. I just can't be involved in any thing of recommendations. That's one. The Universal Fund, there I can send, and I can even send to Doug. There's some great books on the subject, which are readily available on Amazon. And I would imagine a robust Google search you could probably find. I made the mistake of talking about it at another webinar, and just briefly touching upon it, and people, the big response was, we Googled it and it's some weird thing. It's not what you were talking about. And so it's not, easy to find, but I can give you some resources to learn more about it. I also want to add, as far as reaching me, I am past a point in my career where everyone has to be my client, and I love helping people. I love helping people figure stuff out. So if you have questions, anything in the financial space, whether it's, hey, how can I align my portfolio with my values? What about this type of planning they're talking about? What about these concepts? Just reach out to me, and I'm more than happy to chat with you. I don't want in any way people to see this webinar today as a solicitation for your business, but I also do really want to be available to help bring people to that level where their financial decision making is aligned with their values. There's a tremendous change in consciousness taking place in this planet. It doesn't always feel like it when we look at the news day today, but there is a lot, and more people with the power and ability and willingness to make changes and facilitate change on our planet are doing so. My role is on the economic financial side of it, but as we merge up with these ideas and concepts, we are the change. The change is not coming from the top. It is not going to come from our president. It's not going to come from our leaders. It's going to come from us as individuals coming together with a shared collective consciousness. We may have different ways of doing things and seeing things, but together we will find better ways. I strongly believe that in my heart and my mind, and I believe that is the future of this nation and this planet. So I'm saying this because I want to encourage that connection. Work with people that support your vision, align your financial and life decision-making with your values, and surround yourself with people who are in line with those values, and you will accomplish amazing things. As if you would like my contact information, again, I made it specific. I didn't want this to appear in any way as a solicitation. My suggestion would be to reach out to Adrian, to Matthew, to Doug, and they can give it to you. Just when reaching out to me, just tell me you were on this call or you heard this from SC Works, because I don't just do this with anyone, but I would open it up to anyone that hears this message, because I really believe in what they're doing.
Great. Thank you so much. This was so informative. Thank you for answering all of our questions. It was such a great hour. I think at this point, I will turn it over back to Doug.
Okay.
Hey guys, thank you so much, Kristina. That was awesome. And let's see, I will put this back up on the screen so that people can see. How to contact you, for example. Here's all the information I think that people need to know. And yeah, you're a local, Kristina. You're in Aptos, right?
We have offices all over. We're all over California, but the concentrations, San Jose is our big office downtown. I'm in this Seascape office. In the era of COVID, I'm working here most days.